Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 15th of May 2019. My name's Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. Of course, as it's a Monday, we're going to look at things from a weekly standpoint. And quite a bit of interesting movement to look at over the course of the last 7 days. First of all, the euro off the top, but still up 0.45% against the US currency over the course of the last week, and trading with a 113 handle again against the dollar. So an interesting move there in the euro. Plenty of momentum, I should say. Let's see if that can continue across the course of this week. The Australasian currencies even have been performing well as well. The Aussie dollar adding 0.62% to the good against its US rival, and its near neighbour, the Kiwi, the New Zealand dollar, also in the green, adding 0.53% against the US dollar over the course of last week. And the Kiwi strong today, I know, up by 0.2% in early Asian trading. Elsewhere, commodity-related currencies were taking money off of the dollar. The Mexican peso taking 1.02% off of the greenback over the course of the last week. The Russian ruble doing even better with 1.49% gains against the dollar over the course of the last 7 days. And the South African rand trading 1.12% to the good against the US dollar, and trading again with a 13.94 handle. Dollar index for its part down over the course of the week, and down again today as well. I note down by 0.2% over the course of the last 7 days, and kicking off this week with a modest loss of 0.12% thus far. Also worth flagging that Bitcoin and Ether are both up on the day as things stand at the moment. Okay, what's on the calendar then? Events that may move the markets today. Well, it's a pretty light calendar, to be fair. We're easing ourselves into the week. I think that's the fair way to put it. But to come at 06:30 GMT this morning, we will have producer and import prices, I should say, for the month of March out of Switzerland, and the same data is released on a year-on-year basis as well as a month-on-month basis there at 06:30 GMT. 12:30, so a big gap between those Swiss numbers and the next numbers, but 12:30 GMT sees us hop over the Atlantic for the Empire State Manufacturing Index data from April out of the USA. And then we'll hop over the Canadian border at 14:30 GMT for the Bank of Canada Business Outlook Survey, a chance to see how the BOC sees the Canadian economy performing both now and going forward. Then we're back in the US at 15:30 GMT for both 6 and 3 month Treasury bill auctions. That's followed at 1600 by the first of the day's central banker speeches, this one from the Bank of England's Haskell, as I say, at 1600 GMT. And then 1 hour later at 1700 GMT, it's the turn of the Fed's Evans to give a speech. We pause then until 2000 hours GMT, when we'll have data on net long-term Treasury income capital flows. This is a measure of money flowing into or leaving the United States via US Treasury bonds. This data is being produced for the month of February. Okay, breaking news and comment then that's caught my eye overnight and over the weekend. And first of all, Indonesian exports have fallen more than 10% year over year in March. However, that was better than forecast for a drop of minus 11.82%. And the country's trade surplus has narrowed as a result. So a slightly better than expectations there for Indonesia, though it is still showing signs of a cooling economy, I would suggest, that trade balance data. Speaking of cooling economies, activity in New Zealand service sector fell to 52.9 in March from a read of 53.6 in February. The March data was the lowest read since December 2012. And perhaps more worryingly than that, new orders components fell to their lowest level in the data since September 2012. So a sharp slowdown there in New Zealand service activity. Is it just a 1 month blip? We'll have to wait and see, won't we? But I think the new orders component is something that we should be paying close attention to going forward. Meanwhile, President Macron of France will address the French nation today and set out a list of the reforms that he has decided to implement, which are aimed at curbing the yellow vest protests, which have been ongoing now for several months, haven't they? You remember, of course, that some of the initial reforms that President Macron suggested were criticised by Brussels because they would have taken the French budget into a territory that the fiscal compact, if we can call it that, across Europe prevents them from doing so. Let's see what he can actually push through today. Okay then, food for thought and something to take away with you into the trading day and beyond, and why not think about this across the course of the coming weeks. Q1 2019 earnings are underway in the US, yet even before Friday, 5% of S&P 500 stocks had reported their Q1 figures. FactSet research found that FX headwinds were among the most frequently mentioned causes of negativity in earnings among this group's conference calls. And this is a very interesting chart to the right here, courtesy of FactSet, which sets out reasons that have, or factors I should say, that have had a negative impact on Q1 earnings calls this earnings season so far. You can see that FX headwinds are the number one cause, but wage and labour costs, raw material, other inflation, etc., weather, and so on and so forth. The red bars or columns are 2019 frequency, the grey the frequency of those factors being mentioned in conference calls in 2018. So certainly something to think about as we go through the rest of earnings season. Okay, it's risk warning time. Please do take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pebblestone account representative. We'll be happy to take you through those. And as I say, do take the time to read this risk warning thoroughly. Thank you for your time today.